Um, Thanks again, Kathleen. Thanks for the intro. Thanks for the opportunity. I'm excited about this format. I've probably in the last 12 months, I signed up for Zoom, and I've been using Zoom now to communicate and to work with clients up and down the East Coast. And it's really allowed me as a small business owner to have a lot of flexibility to, one, I can train individuals, and I can also work with clients that are remote, which is an awesome opportunity as a business owner, is to use a tool like this. So I'm really excited about the idea of even plugging in locally with local businesses and using this collective wisdom that we all have to grow the community and to enrich each other and all of us to get better. So with that said, thanks for the time today. Let me, I apologize here. I said I was going to start a clock, and I want to just start that so I can be cognizant of the time as we go through this. About 18 years ago, 19 years ago, I was new to the state of Maryland, and I didn't know what I was going to do. And I kind of fell into the financial industry. I used to manage a bunch of photography studios and labs and digital imaging studios. And I was looking for a way out as that industry died, and never thought about the financial industry. I didn't know much about what I was doing with my money. I just made money and spent it, and never really thought about it being a business. And but you think about how important money is to all of us. I heard a gentleman say one time, he said, it's not the most important thing in the world, but it sure ranks right up there with oxygen. It's pretty important to manage your money, have money, retain your money, grow your money. And it's the only thing we can really employ outside of ourselves, is to get our dollars working for us. And the reality is, a lot of people don't know what they're doing with their money. I'm not going to go through every one of these stats, but the stats are bad. Most of America doesn't have a whole lot of money saved. Most of America is going to get to the senior years of life with very little. And so a lot of people, I think, really avoid the subject because they don't know who to trust. They don't know what to do. They don't know where to start. And that's why I really was intrigued by the industry. And I'm going to start out with probably the least exciting thing, but there's the whole idea here is you got to pay yourself first, and you got to figure out where that money's coming from. And the only way to figure out where that money's coming from is you've got to have some sort of budget. You've got to have some sort of guide of where the money's going to go. And the budget for most people that I run into is their bank statement. And that's showing you where the money was spent. It's not showing you what the plan is for where the money is going to be spent in the month of November. And the question I ask everybody is, what comes first? Does the money come first, or does the plan come first? And I would just challenge you, the plan has to come before the money. Because if you don't have a plan, you're not going to have the money come in. As small business owners know, you got to have an idea or a goal, and then you got to put a plan in place, and then you got to work the plan. 5 key areas to where you might put money. As a small business owner, this doesn't necessarily incorporate that, but you do have to have, and as a small business owner and a mid-sized business owner, you still got to manage your personal money so you can have the money saved to keep your business moving in the right direction. And it might be that you replace some of that with, it might be rental income. It might be the cost of doing business, but have a plan, put a budget together. And I do this for the most part when I sit with clients, is I'm working on where the money's going, look at the paper trail, figure that out so you can do this, which is pay yourself first. And it is the most important person to pay, that is you. And whether you work for somebody else, start a business, build a business, the whole objective is one day to be free of work, and you want to have other things working outside of you. And that's never going to happen if you don't pay yourself first. The 3 fundamental accounts that we always talk to people about, and I always talk to people about, is one, is you better save before you invest in a long-term savings plan. You better have an emergency account. The goal there is have 3 months worth of savings at a minimum. If you're a small business owner, I'd say it's closer to 6 to 12. There's always going to be an emergency. I've heard this said a million times. You're either in an emergency, you've either just come out of an emergency, or you're heading into an emergency. And there's all kinds of things that may happen. I hear stories all the time. Somebody got sick, they're out of work, they got laid off. Their business is down because of something in the community, or something in the market. The market's down. Whatever. There's things that affect people, and if you don't have money saved, you're going to be at risk of not being liquid, not being able to pay bills, not being able to fund the things you need to fund. And that's why this gets more and more important, to have longer periods of time where you have money set aside. And that, as a small business owner, I would say it's not the 3 months, it's closer to 6 to 12 if you really want to be solid, if you want to be safe. And there's always an expense, whether it be marketing resources, major vehicles that need to be repaired, purchase that you got coming up that you want to invest in. And rather than going into debt, you want to save that money for that. And then the next one that you want to look at is the short-term accounts, short-term savings plans. And that's maybe that's a strategy of a year out or 3 years out, where you're planning on the inevitable things that may happen. It might be a purchase that you're planning on. It might be getting a larger space for your office. It might be a major equipment upgrade. It might be just the saving money in case you get injured. Those things happen always, and it's the big purchases. So the short-term account is the next thing to look at. And then the long-term, and this is the one a lot of people think that all we deal with on the investment side. And this is, quite honestly, most people have had exposure to somebody where they had a 401k or a 403b. But what I think a lot of people are less familiar with is the things like, what's the difference between a traditional and a Roth IRA? Or what's the difference between a simple IRA and or a SEP IRA? And that affects you if you're running your own business. You've got to know the differences, the cost effectiveness of which one you should be looking at, or whether you should look at a 401k if you have employees. And those get more costly. So a lot of times your small business owners and mid-sized business owners will look at simple IRAs and SEP IRAs. They're the most efficient. They're the most cost effective. And then beyond that, you might want to look at some tax deferred accounts if you've maximized all your other vehicles. And it's kind of like the rule of thumb is, if you get a match, you want to take the match. But as a small business owner and a mid-sized business owner, there's nobody matching your money. So then you got to say, okay, what am I looking at? And usually it's going to be the IRA first, and then it's going to be, okay, do I need to look at the simple or the SEP? And then you've got the ability to put more money away towards your retirement and your future. And the interesting thing I would say about that is what I've learned in my almost 20 years in this business is a lot of the financial industry ignores the small to mid-sized business owner. The financial industry wants the big fish. They want the big 401k plans, the Fidelities, the T. Rowe Prices. They want the big ones. They ignore the small to mid-sized companies. And that's where I've built a career of just really focused on helping those guys manage that, figure out what's the most cost-effective way to do that, and then get them started moving in the right direction. This just basically walks you through what would that look like. Let's say you're sitting down, like I have a gentleman that runs a glazing company, and which deals with glass, and he's got projects all up and down the East Coast, and he has yet to really attack his investments. So when he's working from behind, so he had some money set aside, or he sat down with me and he said, look, I got $1,000 a month. How do we want to attack this? And this is really kind of a good rule of thumb to look at, is taking a piece of that and putting that in an emergency fund, taking another piece and planning for the short-term strategy, and then taking another piece and looking at the wealth building or the long-term retirement savings. And if you notice, the majority of that, you want to get into the emergencies, because like I said earlier, you never know when it's going to happen, but there's always an emergency, and you just got to be prudent and understand that and say, hey, I just got to plan for it. And working with a financial advisor, working with an investment specialist, that's something that's rudimentary. It's something that should be talked about from step one, moving on. The next step is really to talk to somebody about getting out of debt. I know some people will say, well, there's good debts and there's bad debts. And as far as I'm concerned, I'd like to see no debt at all. I don't think any debt is good. Some is better than others, of course, because it might give you some deductibility on your taxes, and then you also might leverage money if you're a small business owner. But there again, you just want to make sure you're not too leveraged. It's the thing that drives a lot of small businesses out of business, is being too leveraged. So we give people strategies. How do you eliminate debt? Well, you just put a plan in place and you follow the plan. And this is just showing a debt stacking strategy where we'll take the smallest debt that might be out there. And I talk to people about just encapsulating it. Once you get a saving strategy in place, once you get a budget, take the debt that you have and let's not grow it. Let's get rid of it. Let's get a plan in place where we can knock it out in the next 5 to 10 years, so you can focus all of your money on building your assets, on building your business, on building your resources. And in this example, this shows a client just stacking their debt. So they pay off their small balance, they have a little mini victory, then they take that minimum payment, dump it on the next one, and then onto the next one, and onto the next one. And what that does for the client is it just gives them a strategy where they pay everything off. Rather than 23 years, they pay everything off in 9 years, and saving them tons in interest, and saving them over the years just a lot of money by doing it that way, by attacking their debt, encapsulating it, and then building their reserves outside of that. So the next time they need money, they've prepared for that. And no extra payments on that, no loans, just a strategy so they could invest that money later on in life. And then it goes on to say, what if they took that money and they invested that? Well, they could really build some assets. They could really build some wealth, and they could dump that money right into their SEP and their Simples and their 401ks and their future. You can't talk about money and investing, and you can't talk to somebody about their finances without talking about protecting their assets. And the way to do that is dealing with insurance. And I think my philosophy on insurance is it's the necessary evil. Nobody likes to pay for it, but nobody wants the consequence of the actions of not having it. I'd love to not pay my auto insurance premium. I have a 17-year-old now driver, and I got a 15-year-old in the house that's looking forward to drive. And my insurance bills have gone up and up and up, and that's just that's what happens in life. And as a small business owner, running a financial office in Owings Mills, it's part of that too. I don't want to pay any of them, but the consequence of not paying them is too extreme, so you pay them. What are some of the insurances you need to think about? Well, general liability insurance. If you're leasing a space, you want to make sure if somebody was to turn around and get injured there, you've got some insurance to cover you. It might be property insurance. You might have some heavy duty equipment in your facility or in your office that you have, and you want to make sure that that's insured. If you've got employees, it might be workers' compensation insurance. If you're driving a car and it's a commercial vehicle, let's say you're a plumber and you've got a plumbing vehicle, or you're a painter and you have a van, you've got a commercial auto. It's a little different than the traditional P&C that I have for myself. I don't have a commercial vehicle, but if you got a commercial auto policy in place, it's the same type of thing. It's just for the commercial side of that. And then you've got errors and omissions insurance. If you have contracts, if you have any kind of paperwork, you've got to be looking at, hey, I need to protect myself from being sued in that case. And then there's even ID theft protection. It might be having access to a law firm. There are companies out there that offer insurance for legal services, whether they give you free consultations, they look at review documents, they'll do contract reviews. A lot of times for cost effectiveness, it's like health insurance for legal, and there's a bunch of different companies that do that. But the idea there is just get the risk away from your business. I'm not saying you need all of those things, but quite often you might need a couple of those to make sure that you have the right amount of protection for your business. And bottom line is risk is always there. You just got to learn how to manage it. You've just got to learn how to make sure that your business is not exposed. And I've seen people go out of business because they didn't take care of an insurance need. They didn't properly insure. They didn't properly save. And they lived so close to the line that it was scary. And, I found also that we form our habits and then our habits form us. If you don't put these things as a high priority, whether it's paying yourself first, whether it's looking at your insurance needs, whether it's paying off your debts, we tend to gravitate to taking care of the things that are the priorities that we see as priorities. If it's paying the rent, or if it's paying the whatever it might be, the light bill, you've got to put these things as important as all of those things. The savings, that's the hardest part that I see for small business owners and mid-sized business owners, is making that a priority, thinking, and here's a good thing, you want to always be positive in your thinking. You want to think, hey, my business is going to get better next year. But what if it doesn't? You still need to pay yourself first. You still need to put that into your payment structure. You still need to take care of these needs, because that's not promised. That's no guarantee that it is going to grow by 10% next year or 15% next year. And the strongest nation in the world, and I ask this quite often when I do a seminar, I say, tell me the strongest nation out there. And a lot of people will say, well, the United States is the strongest nation. And I say, well, it's really not. The strongest nation in our world is procrastination. And it's the reason why so many people don't have much, and because they don't put a priority on looking at their money, looking at their budget, looking at where the money is going. They always say tomorrow, I'll get to it later. I don't have the money today. And that's where the plan always comes before the money. And, I've had the pleasure to work with a lot of clients over the years that didn't have anything when they started out. I've got a young man that I'm going to talk to today. I met him when he was right out of college, and he started an IRA. Today, he's got $125,000 in his Roth IRA. So we're getting somewhere, and he's still in his 30s. Starting is the most important thing to do. Start. It's the hardest thing to do. It's like getting to the gym in the morning. This morning, I was up at 5. I got to the gym early, but I did not want to go to the gym. And I kept thinking in my head, that was the battle in my head. Do I want to go? I don't really want to go, but I need to go. And so that's the same thing I tell people all the time, is that's your finances. You don't want to maybe look at them, but avoiding them, like the ostrich that puts his head in the sand, is not a successful strategy long term. This is just some things about the general liability and professional liability. And it's important to have. You got to understand it. I'm not going to go through and read this whole thing to you, but it just says here, look, everybody needs these things, whether it's, if you're a nail technician, or you cut hair, or you're a dentist, or you're an insurance agent, you need to have these things taken a look at. You need to have your errors and omissions insurance if you're an insurance agent, or if you're a real estate agent. And unfortunately, like I said, a lot of people don't getting around to having the conversation. Was talking to Kathleen the other day, and she was, what about cybersecurity? It's definitely a big deal these days. What I've seen a lot of is I've seen identity theft becoming a big issue. And you see on TV advertisements for Norton and Kroll, and we deal with that all the time. We have a company that does that service, takes care of if your identity gets stolen. I got probably on, I think it was Tuesday of this week, yesterday or Monday or Tuesday, I probably got 10 calls, 800 number calls for the Social Security Administration. And I knew it was a scam. I knew it was fake every single time. And I know people are getting these calls. Obviously, some people are answering and responding because they wouldn't keep doing it. So just be aware, identity theft is out there large. So and the last couple of things here is protect your largest asset. As a small business owner, mid-sized business owner, a lot of people don't think about what is their biggest asset. And their biggest asset might be their partner if they work with somebody else. I've got a couple of guys that they own a couple of pizza shops, and they would have never gotten around to this if I didn't have a conversation first with their family. And then I sat down with them and talked to them about what would happen if one or the other was to die while they're working together and building this business. And if one of them died, they would lose a strategic partner in their business who, quite honestly, was working half the time. If one wasn't there, the other one was there. And so the loss would be severe. So we talked to them about protecting that with something called key man life insurance. Sometimes people will set that up as a buy-sell agreement, where they might have two families that maybe want to buy each other out. And it might be not that complicated. It might just be, if I'm a partner in business with you, I might want to have a policy on you, because if I lost you as a partner, I need to have an influx of money so I can maybe help take care of the loss in the business income that I have to focus now on what happens, paperwork, what you were working on, your clients, whatever it is you were dealing with. I've got to stop and I got to start focusing on that. It might be even focusing on your family and the burial expenses, but having some key man life insurance or having a buy-sell agreement in that case is of the utmost importance. And, as you get later in life, as time moves on, the idea there is you should need less of that as your business matures and as you pay down your debts. And so that's why we focus on term life insurance to solve the problem for that need, because it's the most costly and efficient way to protect that business, whether it's a 10-year or 20-year or 30-year cycle. Our company, we have a bunch of different resources, 40-some-year-old company, and I've been doing this for, like I said, almost 20 years. And the key is, though, what comes first? Is it the money or is it the plan? And I would just challenge all of you. It's the plan. Working with somebody, having an idea, and it never hurts to have some outside influence that does this for other folks, that spends their time, their resources, their life studying the material, getting more efficient, and helping people be more efficient about this is invaluable for the business owner. So that's my contact information. Kathleen, I am done. I ran 22 minutes. I appreciate the opportunity to be in front of you guys today. I hope I provided some value. Hope I gave you something, taught you something you didn't know already. And if you want to jot my information down, I am here. I'm here anytime you want to call. I'm available. I can't say I don't always answer the phone, but if you call me and you're looking for me, I will return the call as quickly as I can. And excited about being a part of the chamber. We got Taste of the Town coming up, and thanks for this idea, Kathleen, and putting this together. This is an incredible format.
Oh, it's my pleasure. Thank you, Gordon, for coming on today. And once again, we're going to be doing these webinars the first Wednesday of every month. And our next one, I believe, the topic will be how to work with jerks. I have a speaker that actually wrote a book about that, and he's going to talk to us about that.
That sounds awesome.
Yeah, so watch out for information on that one. But please, please take Gordon's advice. He has seen businesses go out of business because they didn't plan for the unplannable. You don't know what's coming down the pike. I just had a friend. She is an accountant, and the place where she worked was a small business, and the owner just died overnight, just died out of the blue, and it's been a mess. And there was nothing, no coverages, no plan, nothing for this happening. So please just keep your eyes open and keep your ears open for these opportunities to learn. And I do appreciate everyone coming. I do see there is a question. Oh, Paul. Hi, Paul. Thank you. You're awesome too. All right, guys. Well, you guys have a great rest of the week, and tune in and watch out for the next one. Thanks, Gordon.
Hey, Kathleen.
Yeah.
Just make a quick comment. It's an interesting thing you're talking about the accounting firm, because a lot of people think we are like one and the same. I've had people go, well, I've got an accountant, I've got a financial person. And I think that's not even the same thing, but it's just interesting when you start digging in and looking at what different businesses do. So, but hey, once again, thanks a lot. Appreciate you, and look forward to seeing all you guys soon. Come out to Taste the Town.
Thanks, guys. Bye-bye.